All right, let's go ahead and get started. And let's begin with the first page here as I slide back to it. Sell in May, go away. My name is Brian Kahn. You have my email there. You also have the IBFX Daily Forex Trading Edge.com website where I post daily market commentary. I posted commentary there Monday, Tuesday, Wednesday, definitely an active week. So you want to be getting that daily update that I provide. And then you have questions on how I work with individuals, teaching them to trade and invest. You can go ahead and see that at JupiterPeakFinancial.com and that same market commentary as well over there. Let's get into it, but before we do that, we'll fly here into the disclaimers. As we always do, remember no buy, hold, or sell recommendations. And while you're reading those, just think about that tonight is for you. So if you have questions, please reach out with them and type those into the questions function. And I'll check the panel and I'll answer those, but that always helps because it leads to other topics. And with that, here is the disclaimer. In the volatile markets disclaimer, in volatile or fast-moving market conditions, stop and condition orders become market orders to be filled at the prevailing price, which may be vastly different from the desired price. Stop loss or conditional orders do not always guarantee a fill, and such orders may not be filled as placed, and substantial losses may occur. So we trade because we want to have volatile markets. That bodes well for traders for the most part, and we're obviously seeing that now, so just keep in mind that that disclaimer is there. And again, I'll repeat, no buy, hold, or sell recommendations. Next slide with the outline for where we're going tonight. Fundamental analysis, macro and micro events. Technical analysis, the intermarket relationships that we're looking for as we compare certain markets against other markets. Equity markets, what did they do in the past around this time? The past 4 years, they sold off, and so that's the adage sell and may go away. And what does that mean for Forex markets? 2012, we'll take a look at those equity market and Forex market comparisons. And then in 2013, we'll look at the Forex market analysis as well going forward, where we are right now in this quarter and what hopefully we can expect to see or at least project out given our fundamental and technical analysis. And always a quick review, check if there's questions and links to resources. So fundamental analysis, again, I stress the importance of, that's why I put it in italics there. And just a quick catch up, we just met last week. Usually I do these every other week, twice a month, but due to the schedule conflict, I had to do it 1 week apart. So not much has changed in the last week as far as fundamentals. You can definitely see the recorded version of last week's webinar on the IBFX YouTube page, and I'll show you that link at the end. But not much has changed. We know that central banks are still involved. Obviously, fundamentally, things have changed a little bit with what happened in Boston in the United States a couple of days ago. But again, as far as the fundamentals with our central banks, not much has changed in the past week because there just hasn't been that much news coming out of them. Your broker provides you great fundamental analysis through webinars like this, through the Daily Forex Trading Edge site. And they have a link, your broker has a link to Forex Factory, which is a great online calendar. So use that so you're aware of big market moving events like central banks talking or unemployment reports or inflation reports, whatever. The microdata is the data that's coming out in that specific currency, and you're obviously trading two currencies, so you have to pay attention to the microdata in two currencies. But you want to be paying attention to that, and you can do that through the economic calendar, forexfactory.com, that IBFX links you to. You have TV stations around the world, such as CNBC and Bloomberg, and other market sites to use. But again, we are in a as I talked about it a lot last week, we are in a fundamentally driven market, and so you've got to be aware of those macro and micro events. Technical analysis, just some keywords that I want you to be aware of that I think are always important. Trends, which way the flow is going, support, where there are buyers, resistance, where there are sellers, and any intermarket relationships that can help you find an edge. I have broken down as of late. That really is dated because some new relationships have come in, but yes, there was a major relationship in the past, which we'll look at that has broken down. But what are you finding now that's giving you a trading edge? (2012) market performance, just a discussion of what happened in 2012. In 2012, the equity markets in the first quarter did very well. And then they had a somewhat weak late part of the second quarter, where we're right now. Think about the first quarter, January, February, March. The second quarter is April, May, June. That's the sell and May go away. And then the third quarter, July, August, September, and then fourth quarter, October, November, December. In 2012, we were strong quarter one, weak quarter two, strong quarter three, and strong quarter four. In 2012, the Forex markets, in quarter one, as the equity markets went up, U.S. dollar was weak. As equity markets rolled over, sell and May go away in quarter two, the U.S. dollar strengthened. When the equity markets sold off, that's that intermarket relationship, the U.S. dollar strengthened. Equity markets down, U.S. dollar up. Then all of a sudden, the equity markets in quarter three and quarter four started to turn around and go up. And in quarter three, in quarter four, we had a weaker U.S. dollar. So the U.S. dollar was opposite to equity performance. That's that intermarket relationship that I was talking about that we're trying to use and take advantage of. 2013, quarter one performance. Equity markets to the moon. Up, 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 day after day after day after day. Now we're getting into mid to late April. And we've had such a great quarter on top of a good year in 2012, on top of a flat year in 2011, on top of a very strong year in 2010, on top of a very, very strong year in 2009. I'm talking about equity market performance. We've done very well this quarter, and now we're at all-time high levels in some of the indexes in the United States and some of the indexes around the world. What does that mean for the VIX? The VIX is a volatility gauge. Volatility has gone down. Trading ranges, for the most part, went down. What is going on now in foreign currencies in 2013 in quarter one? Let's look at those Forex pairs, and as you can see, equity is strong, and we're going to go to the charts now, but the United States dollar was also strong against most currency baskets out there. So my question for you as we go into the charts, if equity markets are going to do what they did in the summer of 2009, summer of 2010, summer of 2011, and summer of 2012, if they're going to back off, like they are now over the past few days, is April the new May? That's what some people are asking. Is it sell in April and go away because we've done so well over so many years and we've done so well in this first quarter? If we start to go sideways or down for whatever reason, what does that mean for the U.S. dollar? In the past, when equities went down, U.S. dollar went up. Well, the U.S. dollar has been quite strong against some currencies as of late, so we will have to see. So what will happen if equities sell off? There's no guarantee that equities sell off. I'm just asking the question. So let's switch the program here. And I'll bring up the Metaphor Trader platform. And again, as always, if you have questions, please let me know. And if you need to review this, again, this will be recorded on the IBFX YouTube page, which I'll show you in just a moment. So just looking at a daily chart of the pound US dollar, the first quarter, January, February, March, the US dollar was very strong against the pound. And now the pound is starting to gain a little bit of traction. So remember, if the equities are going to go down like they have in the past few summers, at that time, U.S. dollar was strong. Well, the U.S. dollar has already been very strong against the pound as equity markets went up. So equity markets went up and the U.S. dollar went up against the pound. It went up significantly, 13, 14, 15 pennies, 1,300, 1,400, 1,500 pips, and now we're seeing a retracement up to that 38% mark. But I just want you to be aware of what we've already done in this first quarter, because that might change your perceptions that maybe the U.S. dollar can't get stronger. And again, this is where the macro fundamentals come in. You've got to be paying attention to what the Bank of England is saying about interest rates, and you've got to be paying attention to what the U.S. Central Bank is saying about their interest rates. In the U.S. dollar, in the euro, the first quarter, the euro actually went up to start the year and then down, 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 and then back up. So it's kind of actually in the same place. It was strong, the euro, then weak. The U.S. dollar gained, and then the euro has gained back. So not much of a trend there, all right? Pretty strong trend for a part of it, but we kind of are in the same place. We're not way lower or way higher like we are in the pound. In the Canadian dollar on a daily chart, same time frame, first quarter, here you are, 96, 98, 99, one even, 101, heading towards 102. The U.S. dollar gained ground, and then all of a sudden the U.S. dollar backed off. And then just in the past few days, as we've had commodities, if you're aware, if you're watching gold and oil prices, they've sloughed off a little bit. The commodities have really taken a hit, and the U.S. dollar is back up near its highs. So again, the U.S. dollar is strong here. If commodities continue to go down, you would expect the U.S. dollar to go up against commodity currencies. But again, that depends. Maybe the Bank of Canada says we're raising interest rates, and that's a little bit different there. U.S. Swissy over that same time frame on a daily chart, Again, you can see the trend was to the upside in the U.S. dollar. In the beginning of the quarter, backed off quite a good amount. I love to do my Fibonacci's to see where I am now compared to where I was, and I can draw that pretty quickly. Maybe you have your double top up here, pretty clean there, and all the way back down here. So not much higher than we were at the beginning of the quarter. So it was higher, and then it backed off. Aussie dollar versus U.S. dollar on the same daily time frame, and here we are. In the beginning, the Aussie dollar started to decline, and then the Aussie dollar strengthened. Look at all this resistance, you guys, here. This is pretty neat to see right here. Look at that resistance line where my red horizontal line is right there, right about the 105 mark. Is that right? I got to move the panel to see 105.60. We backed off. We went to the bottom of the range. So again, not much of a trend here. Down, up, back down. But maybe you can use, that's why I said trends for the pound, support for some currencies, resistance is definitely in play in the Aussie US dollar at the 105, 105.80-ish, 105.70-ish mark, somewhere around there. Again, as a day trader, as a longer term trader, can you take advantage of this as you look at the patterns and understand what's going on in using trends, support, resistance? That's what I want to put out to you, is don't make it too difficult. Let the charts help you, and depending on what style of trader you are, how long you're trading for as far as time frames go, day traders, intermediate, position traders. Then you have the New Zealand dollar, Aussie dollar. I don't know what New Zealand exports a lot of. I know that Aussie exports lots of gold. Canada exports lots of energy. I know they have a lot of sheep in New Zealand, but I guess the price of wool is going up because since the beginning of the quarter here, we went sideways in the U.S. dollar and the New Zealand dollar, and then we spiked up. And if I take this out to a weekly chart, look at this, and you go out to a monthly chart, yeah, we're near all-time highs basically in the New Zealand dollar. So maybe their currency is, an interest rate obviously is different than the U.S., but the point is that currency is doing a lot better, and you can obviously get a lot better return if you were invested just in a bank account in New Zealand versus a bank account in the U.S., because their interest rates obviously are holding up higher than ours. Same thing in Australia. So typically, the Australian dollar moves somewhat with gold prices. Well, gold prices are getting killed. The Australian dollar did get killed over the past few days, definitely. But overall, as you know, the Australian dollar, when you look at it historically, is up. If I look at a weekly chart here, 2009, 2010, 2011, 2012, 2013, it's very close to its highs against the U.S. dollar at 105, 106, 107, 108. And gold over that time frame is stronger, but as we know, it did back off recently. So just, again, this is the macro fundamentals that I want you being aware of, is what are the central banks doing against each other as you trade the Aussie versus the New Zealand dollar. You have to pay attention to both the macro events, the central bank stuff, and the micro events, the employment data, the retail sales data, the consumer confidence, the inflation data, that kind of stuff. That's the micro events, how each currency is performing against another currency, or how one economy is performing against another economy aside from the big central bank stuff. So just keep that in mind. All right, let's move back into the slides here. So my question for you tonight, what will happen if the equities sell off, given now where you see the U.S. dollar strong against some currencies, flat or maybe weaker against others, but in the past, as equity markets have done poorly, U.S. dollar has been the flight to quality or the flight to safety. We don't know, one, if equities are actually going to sell off, and two, if they sell off, what does that mean for other currencies? And you have to take into account, as I said, the macro fundamentals, okay? Have I said macro fundamentals, right? So we're stressing macro fundamentals. So to review fundamental events, there you go, macro and micro events. Have I talked about macro events tonight? Technical analysis, trend, support, resistance. We saw great amount of resistance in the Aussie dollar at the 105.70 level. We saw some Fibonacci's that I drew on some other currencies to see how much they had retraced. What's in store for Forex pairs going forward? That's obviously up for you to decipher with your daily fundamental analysis and technical analysis. I hope that I can provide support for you as I provide my daily market commentary, and obviously I hope that IBFX can provide that support for you. So the next webinar will be in about 2 weeks in May. We'll do a fundamental update. We'll do their technical analysis. The main topic has yet to be determined. And then obviously if you want to review this or other recordings, you can go down here to the IBFX YouTube page And if you want to see what I write every week, or every day, fundamentally, technically, trading psychology-wise, that gives you your daily market commentary as far as what I'm seeing in these intermarket relationships and Forex trading patterns and things like that and trading opportunities. That's at dailyforextradingedge.com. And then also my website down below, again, at Jupiter Peak Financial, reading about how I work with individuals, and all of the market commentary that I provide is there as well. So with that, I thank you very much for your attendance. I don't think there's any questions tonight, so everybody hopefully is getting and absorbing the information that I'm giving. And as I always say to end, happy trading, invest intelligently, and thank you for your attendance.